Hello and welcome to the LP Financial Services Forex Trading Class Introduction to Fundamental Analysis videos. In Lesson 4, Understanding Economic Indicators, we are ready to start with Part 1, the definition of this. The execution of fundamental analysis in the Forex market is done through the use of economic indicators. These are indicators that point to the state of some economic factor in the country whose currency you wish to trade. Economic indicators are published by various sections of the government and private companies. These statistics are analyzed by market investors to predict the direction of the Forex trading market. Forex economic indicators are published at fixed time intervals and are followed by any serious online foreign exchange trader. We'll discuss the major economic indicators: interest rates, GDP or gross domestic product, non-farm payrolls, retail sales, the CPI or Consumer Price Index, the PPI or Producer Price Index, trade balance figures, industrial production numbers, durable goods orders, new home sales, and existing home sales figures. Our first indicator we'll talk about are interest rates. Interest rates measures the interest rate for overnight money market deposits. Short-term interest rates are the paramount factor in currency valuation. Traders look at most other indicators merely to predict how rates will change in the future. The usual effect is, as interest rates go up, the currency goes up. The next indicator we'll follow is the GDP or gross domestic product. This measures a change in the value of all goods and services produced by the economy. It's the broadest measure of economic activity and the primary gauge of the economy's health. The usual effect is, as the GDP goes up, the currency goes up. Our next indicator is our non-farm payrolls, or NFP. This measures the change in the number of employed people during the previous month, excluding the farming industry. Job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. This is a big number, and the usual effect is, as the non-farm payrolls go up, the currency goes up. Our next major economic indicators are retail sales figures. Retail sales measures the change in the total value of sales at the retail level. It is the primary gauge of consumer spending, which accounts for a majority of overall economic activity. The usual effect is, as the retail sales go up, the currency goes up. In our next video, we will continue with Part 2 of our major economic indicators.